just a very brief procedure of general accounting and month-end closing process in the hospitality industry, right? So generally, the first thing, as we have discussed in our previous modules in income audit module, is the first thing that the process starts with always revenue reconciliation with the system and the settlement. So that income audit is doing on a daily basis, right? Usually they do on a daily basis, but at the month end, they usually is going to prepare a general reconciliation for a whole month rather than on a day by day basis, which is easy because they just have to collect. If they are doing their job on a daily basis, it's not going to take a long time. It can be just done in one day. They consolidate all the revenues from each day, reconcile with the AR, reconcile with the cash, reconcile with the bank, what has amount, how much advance has been received, what is the gas ledger, and the all the settlement modes, right? Whether it's the bank reconciliation, whether it's the bank, whether it's received by cash, whether it's received through the AR, mean the bill has been raised, or whether it has already been received in advance and now we are just adjusting that advance, whatever is that, but you have to reconcile the entire revenue. So that is going to be the first process, and what you are recording the revenue in the GL together with the market segmentation and the other details of the of the statistics, right? The your ADR, your room number of rooms sold, your early check-in, late departure, average check, and the covers by meal period. So you may have to record a lot of statistics in your accounting system so that you get the right year-to-date numbers, right month-to-date numbers, and also compare with the previous years. We don't really rely on the PMS or POS system for these statistics reports, because the usually when the system is generated the reports, they may not be correct all the time, right? And there are sometimes you cannot get the comparable reports compared to the previous year, compared to the year to date numbers, because if there is any error, you cannot fix that. But in accounting system, once you feed the entry, it's freeze. There is no there cannot be any change in the accounting systems. So that's why usually we feed in with the statistics entry also into the month-end closing system so that the P&L is freezed. Once you have generated it, it's done. You are not going to rely on the POS on PMS system to generate the statistics report separately for financial reporting purposes. Then once you have finished all the revenue reconciliation, then the next step is to make sure that all your POs or all your receiving has been recorded in the system. So there are usually like last minute invoices which are received. There are sometimes the amounts are received, like goods are received on the last day of the month or second last day of the month, but the invoice is not raised by the supplier. So what are you going to do with it? There may be something which has received directly by the department and there is no invoice yet. So how you are going to record that? So you have to have a process. So usually the process we follow is we look at the pending PO list every month and then we see whether this PO is really received or not. Sometimes it happens that you get the goods but you don't get the invoices, and that's why you are not putting into the system. You are not receiving anything. So it means that you need to make provision for those goods and services so that all the expenses for that particular month are recorded in that particular month rather than carrying over to the next month. So you have to ensure the completeness of PO posting and receiving invoices. So how you are going to do that? You are going to send ask the all the departments, okay, is there any service or is there any goods that they have received from the supplier on a materiality basis, let's say on a higher than $100, right? And whether they know that the invoice has been received or not. Generally the departments would know what they are getting directly from the outside supplier, especially the maintenance department, especially the sales and marketing department, because they deal directly with the suppliers. most of the time instead of direct dealing through the purchasing system, purchasing managers, because they have a lot of direct requests. So whether these invoices has been received or not, whether the job is done or not, sometimes the job is done, the invoice is not received, and so we normally give them the pending PO list also to confirm whether these POs are still pending or not. And that's a very good housekeeping also to make sure that there is no unnecessary POs which are already received or which are not supposed to be received anymore are not shown outstanding, because as we have just discussed, the accounts payable is very relying very heavily on the purchase orders to check whether the invoice is correct or not. So apart from the receiving person who is making the entry, they will also look at the PO. So it can be possible that if the PO is pending for a long time, nobody is receiving. The receiving department guy can go and tell the supplier, okay, this PO is pending. Can you give me an invoice? I will give you 50%, right? So what they will do is they will match the PO, get the receiving guys to sign up on the invoice, pass on to accounts payable department. Accounts payable department will see, okay, the invoice is there, the receiving stamp is there, the PO is there, so it's okay to make a payment, and then they will just make a payment. Done. So without anything, you have lost the money. So that's why the to get the feedback from the department heads on the purchase orders, pending purchase orders, that these jobs are done or not, whether the invoice has been received or not, why the PO is not closed yet, if it's pending for a particular time, let's say more than 2 months, why is it pending? Then when we are questioning like this, then it's easier to have a grip on the expense recording. So once you have received all the invoices, and once you have received all the invoices, and if the invoice is not received but service is done, goods are received, then you just need to make a provision for those expenses into the purchase records. So once the first step is to recognize the revenue, the second step is to complete the purchases, right? So that all the purchase of the food, all the beverages, all the contract services, all the goods that has been received in the hotel are recorded in that particular month. So that is second process. Then third process is
Sir,
once you
one
have
question.
yes.
With regard to the provision, can we do provision for inventory items also?
Yes, if the inventory items are received, that's right.
Uh, Sir, in that case, the inventory will be not tally with the accounting system
Right.
because we have not done the GRN.
No, but you will record the provision only when you have done the GRN, right? Means the items are received actually.
If uh, if there is an invoice, then there will be a GRN process, no, sir.
No, there's
If there is
the
no, if
GRN
there
can
is no,
receive early. It's like the goods received note is something which is you are processing by yourself. So there can be a scenario. Let's say you request for 10 kilo chicken, right? So supplier has sent you the 10 kilo chicken directly to the kitchen, but there is no invoice yet, because they may just give you on a delivery challan or maybe a goods received note, or maybe there is no documentation. So the receiving department is making their own GRN, just putting into the system that okay, this amount is received, or maybe there is no entry at all in the system. So what will happen at the end of the day, that amount, if that amount is not consumed, it will be in the inventory because it's in the counting, but there is no receiving entry right at that point of time in the system. So if you are not making the entry into the system, whether you have received the invoice or whether you have not received the invoice, but you may ask, if I have not received the invoice, how can I post in the inventory system, right? Because
yes, sir.
if there's no invoice, you will not be able to post into the inventory system, correct? Then
Yes.
yes, your inventory is going to be different from your GL, at least for that particular month.
Okay, sir. But in
So
that case,
means,
we can receive on the basis of delivery challenge
yeah,
or delivery
or
note.
yeah, or you just make an internal delivery note that okay, I have received these items to put into the system, and the invoice, there is no invoice. So in normally what we used to do is we used to create a supplier with the call no invoice supplier. Means that supplier is no invoice. So you post because our system was like if you post into the GRN, it will automatically flow to the AP, accounts payable function. So normally you have to post somewhere. If you have a GRN, the invoice has to be posted in the accounts payable function. Otherwise, it will not match. So what we used to create is we used to create a no invoice supplier. So we park that amount into no invoice supplier. So once you actually get the invoice, then you just transfer the amount to the correct supplier. So you are not still posting to the supplier account yet, unless you actually get the invoice.
Okay, sir. But if there is, if it won't be catch in the when we take the inventory. If the item comes on the last day, for example, vegetable,
Hmm.
it comes on the last day of the month.
Yeah.
Uh, yeah, if we don't record it, we cannot catch it. Like we cannot
Yeah,
trace
you
it.
will not be able to catch that up. Yes, you're
Yeah,
right.
yeah,
Because you normally do the inventory on the last day of the month. So when you are doing the inventory, actual inventory, you will not be able to catch what is coming in after the inventory, right? So in that case, because those amounts are very small usually, but the cost controller is they are smart. When they next day they check what has been received on the prior day, they will just add it to the inventory manually. So in that case, the system inventory and the GL inventory sometimes does not tally. So what you have to do is you just have to have a reconciliation ready that okay, total purchases are this much, but some of the purchases are recorded on a provision basis, which is not into the inventory system because we require the cost controller to check against the inventory system. So all the purchases that we are posting in our accounting system, all the issues we are putting into the accounting system have to match with the inventory system that we are having, right? And if the amounts are not matching, the cost controller have to explain why this is not matching. So they will just say, okay, these are the extra invoices which we have posted into the purchase, but they are not really posted into the inventory system yet because the invoice was not there.
yes, sir. What normally this receiving personals they don't
Mhm.
post in that month. They push to next month,
Yeah,
which is wrong.
which is wrong because then
Yeah.
they don't have to do any kind of reconciliation and all the expenses will go into the next month, which is not right. The revenue is recognized in one month and expenses are pushed to the next month.
Yes.
So that's not the right process. The right process is to make sure that all the invoices that are received or the goods are received are actually recorded as a purchase so that the cost allocations are done, right? So that was the second process.
Yeah. In that case, we can do provision and we can show as a difference in that particular month by giving
Yeah,
an comment saying that this was a invoice which was received on the last day of the month.
correct.
So,
Or
yeah,
has not been received yet, but we have received the inventory. So that
yeah,
that normally happens like with the imported purchase. So what we used to face is that we used to order things from, let's say, from China, right? So the goods received already, but the invoice has not been received. The custom has been cleared. So sometimes the the custom guys has not sent the invoice. The supplier has sent the invoice, but we have not made the payment. And because the it was in the foreign currency, so we cannot record in the on an estimate basis. So what the accounts payable department used to do is they just keep it into the holding and don't post the inventory also, don't post the expense also. So what would happen? Your physical inventory is going to be different from the system inventory, right? But they know that this is different. So what they are doing is they are not recording those expenses in that particular month. So what they do is when they post the invoice into the inventory system, then they issue out from the back date all the issues and in that particular month. So that month when they actually post the inventory and the issues all of them together into system, the issues of that month increase like significantly. So the expenses of the last months which you have been keep on issuing, are falling into that one particular month when you are actually posting the invoice. That's a practical difficulty that we used to have. So when we look at the GLN, we were not able to explain. One time with the room amenity cost was very high, and we didn't know how to explain that. So we went into the details on why this happened. When the housekeeping say, "Oh, we have actually been issuing these records on on a monthly basis, but the expense is not being shown." So then I realized, oh, this is the problem because they are maintaining a manual inventory and issuing the physical goods. The housekeeping department is getting it, but we are not recording the invoice, or we are not recording the expenses because we have not posted the invoice into the system. So what we did from that month onwards is that if there is any shipment received, we will make a provision into the system for these purchases, and whatever is issued we also issue that particular month and reduce the inventory. So we put into the inventory at certain value and we record as a provision at certain value, even though it's a foreign currency exchange there will be a difference, right? So we don't mind with the difference. So when there is a actual payment and if there is a foreign currency difference, we just pass that to the forex account, so that the month expenses are recorded on a monthly basis rather than recorded on a at one ad hoc basis. So we sometimes when you look at the GL and you see, oh, there is a problem, then you realize that the process has to be changed.
Okay, sir.
Okay. Okay. So the third step after you have recorded the expenses, recorded the revenue is to look at the general ledger. So now every month we make accruals, right? Every month we make provisions for electricity, for telephone, for maintenance contracts, for annual maintenance charges, for many things. So usually the best practice is that we reverse all the previous month accruals, and then all the expenses which we are making the payments will charge to the correct expense account where it has to go, so that the accrual is reverse of the previous month and actual payment is posted into that account. So if there is a difference between that, it will be taken care of by automatically. You don't have to post another adjustment journal to post the difference between what you make a provision for and what you are making the payment. And then at the end of the month, you are going to look at all your accruals again and say, okay, I used to make an accrual for January, February, March. I made a payment for January and February. So still, I need to make an accrual for March onwards. Or so you have to reassess based on how much you have actually paid and how much accrual you used to do, and then it becomes very easy to make an accrual entry on a monthly basis rather than making the fixed accruals and then finding out if there is any difference in the payment and the accrual and adjusting those, because that's again extra step that you have to take care. So that's the process of the expenses. So you will find that in your general ledger. So that's the second step. The third step, fourth step, I would say, is the prepayments. So there are uniforms you are buying. You may pay for annual maintenance charge for the 12 months. You may pay rental for 12 months. You may pay insurance. So there are prepayments, right, which you have to charge over to the next coming months. So after you make all these payments, all these accruals, all the invoices, then you look at, okay, what needs to be prepaid to the other months, and then you will make that entry so that this month expenses are freezed. After you have done this, you will do the provision for other expenses. If there is any other expense for AMCs, for the insurance, for the gratuities, for the bonus, so all those kind of things which you know you are not going to pay, usually you can do the expenses provision. So in order to make our life faster at the end of the month, we used to do this accruals, payments, and provisions early, like on 24th, 25th we finish all this because we know what we are going to pay in the next 5 months, or so we can estimate we are not going to overpay, right? And prepayments we know we will record immediately in the same month, and provision for expenses, we also know what we are going to pay. And usually we stop paying in the last 3 4 days anyways. We don't really pay anything unless it's super urgent. And then you will post all the materials that are being issued from the stores, and reconcile the posted entries. Now you can post by item into the GL, which will make the GL very long, or you can post by category or major expenses and other store items. So many hotels follow different type of practices. Uh, they identify some like top five or top 10 items separately, and then post that one by one, and the other item they post as a bulk entry. Or sometimes if it's integrated software, then you can post by item also. But in that case, only the problem is the GL will be very long to read. And then the last, after you have done everything else, then only you will continue to do your food cost reconciliation. So food cost reconciliation is usually done by the cost control department. Now it's done in the last because you have to make all the accruals, all the food and beverage invoices into that, reconcile with the stores and also issue the store items. Then only you will do the food cost reconciliation. So that you can, after that you allocate the food to the kitchen centers based on the transfers, based on the we look at the cost control board in our cost control sheet, cost control module, that how we allocate the cost to different kitchens, and to the bar, and to the food, to the wastage, to the meal entertainments, and all different type of charges. So once you have done the food cost reconciliation, then you will go to allocate the cost of departments. Now food cost reconciliation affects the meal cost usually. So that's why the allocation of like laundry cost, flour cost, those are some departments which are common, right? So there may be many common departments in the hotel which are serving multiple departments. So once you have finalized all the expenses of all the other departments, then only you will go to allocate the cost. So first is the canteen cost. Once you have done the food cost reconciliation, so allocation of department follow a very specific process, right? First you have to allocate the canteen cost, then you may allocate the, or maybe first you allocate the laundry cost. Once you have allocated the laundry cost, then you go ahead and do the meal cost, and then you will do the other department like flour and other departments which are there. So that is the general process for allocation of the cost. And then finally, once you have done all these costs, then you will review the GL again one more time, all the general ledgers, all the profit loss, and then you will look at the percentages like cost percentage by yourself, and make the adjustments if there is some and find out if there is any error in accounting, and make adjustments based on that review. So when we are looking at the GL, when you are looking at the P&L, you may see the some payments are very high compared to the previous month. So the chief accountant, before they finalize the profit and loss account and submit to the FCA GM for review, they have to do their own review first, right? Initial review, to see if there is any cost which is too high or too low compared to the previous months, compared to the previous years. And if yes, then you have to find the reason why. If the reason is justified, then it's fine. If the reason is not justified, means you find any error, then you just have to fix that error. So that's why the last step is to review the general ledger and make adjustments if there is any posting mistakes. So that there are usually posting mistakes that you find after doing everything. So you have to fix them up. So that's the general process of month end closing. So is there any question for this, or any confusion, or any feedback?
No, so all fine. All fine.
Not on my end, sir. No.
Okay, okay. I it's very short checklist for this, because every hotel have their own different setup depending on what kind of software they use, how many people they have. So here you need a lot of coordination by other department, right? For example, uh, ensuring the PO posting. So you have to ask the departments what kind of invoices they have received which is not paid, from the marketing, from the maintenance, from the food and beverage, from the room department, and make those entries, right? When you are looking at the allocation of cost, you need to know the poundage from the laundry department, from the number of dishes served by the canteen to different departments, number information by the florist, how much cost need to be allocated to different departments. So you need all those information from other departments to make the journal entries correct. So the chief accountant has to be in touch with the other departments to get the data on time. So you have to maybe issue them the input sheet, like okay, this is what information I need, and by when. So we used to issue a schedule that say, okay, on this week we are going to do a general inventory counting. Please prepare your areas. By this week, we need your numbers for laundry, for telephone calls, for the canteen area, for the flour, for the banquet expenses. We need all these reconciliations from you, right? From the banquet expenses. So we need all the information from different departments, so that and we issue out the templates on time, so that by the end of the month all the information is arriving and we are able to do the general month end closing. So usually a month end closing process should take about 3 days to finish, depending on the volume of the in the hotel. But like in our hotel, in Shangri-La, Bangkok, we used to finish by fourth or fifth. We used to issue out the P&L for review, and we do that by because we start early, right? We start by 24th, 25th, and one of the major expense which is I miss to post here is the payroll. When payroll is very easy because usually you prepare the salaries before the month end to pay by the month end, and you get the amount very easily. So that's a very simple process. That's why I didn't really mention that in the this sheet. So by when you are normally getting the P&L, Seth, or you're not getting the P&L?
Do get the PNL, yes.
When?
Upon request, I
Oh,
don't always have access to it or the accounting software.
okay. But mine, like, there's no standard like they should give you the P&L by third or fourth of every month.
Doesn't get to my department, so that's something I'll have to get upon request.
Oh, okay. Okay. And what about you, Seth? Venki, when you normally finish your month end?
Yeah, by fifth, by seventh, we send out the flash report,
Hmm.
and by 15th, we conduct the meeting.
Hmm. Hmm. Hmm.
By that time, we
Yeah.
get it.
So usually the book the final month end closing supposed to be done by fourth or fifth, and even when you have like ERP, then it's even faster. So you may be able to do that even faster. So it depends on the hotel size and depends on the hotel finance team and the data that they need to get from the other departments. It usually takes some time. So, but it's not a lot of time. Usually they finish the month end closing by fourth or fifth maximum, so that the reports are done by sixth, seventh. Because once you've done the month end closing, like after you review the GL and make adjustments, the one another thing that we started to do is we start by fourth or fifth, we issue out the P&L to the departments so that they can review it by themselves. And if they have any question, they can ask. So usually, in my experience, when I issue the GL to the GL and also the P&L to, let's say, housekeeping department or front office department, they come running to me. Oh, sir, why you have charged me this expense? I have not used it. There's a mistake, or there's a double posting, right? Or there's a big posting, but it's supposed to be allocated. So that these are kind of usual problem that we used to face when we started to issue out, because they help us to find out mistakes early, rather than sitting in the P&L meeting and they, oh, this is a wrong accounting, we have not charged to the correct department, correct cost center. So that kind of problems also we face. So we started this best practice to issue the P&L or a NGL to the departments early, before we finalize the month end reports to the GMs or to the corporate office, so that we are sending the correct data to them, and we allow them like 3-4 hours to review the GL and entry, and next day they have to come back to us, and we fix the errors immediately, and then we finalize the P&L. Okay, so that was the discussion for today. So tomorrow we